the Property Pod. Welcome to the Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
Hello and welcome to the Property Pod, South Africa's premier weekly property investor podcast. My name is Suren Naidu, and on this Moneyweb show, we gain insider insights from leading CEOs, analysts, developers and entrepreneurs in the country's dynamic real estate sector. On this week's episode, we have George Muchanya, head of Growthpoint Investment Partners, on the show. This is in the wake of Growthpoint Healthcare Property Holdings, or GHPH, announcing one of its biggest acquisitions to date last week, the 2.4 billion rand deal to acquire Aurea Senior Living. Growthpoint Investment Partners is part of the broader Growthpoint Properties business. That's the largest JSE-listed REIT. And the latest Growthpoint Healthcare deal was one of our top reads, believe it or not, on Moneyweb last Tuesday. George shares further insights on the deal and what it means for the Healthcare Property Fund, and also gives us an update on the other funds that might be under the unit that he's in charge of. Welcome to the Property Pod, George.
Thank you, Suren, and glad to be here.
Looking forward to the chat. I've been meaning to have you on the podcast for a while, considering Growthpoint's expansion into healthcare property and also student accommodation. But we'll kick off with the healthcare news. How did Aurea Senior Living, how did that deal come about, as Growthpoint Healthcare and Growthpoint Investment Partners been looking at expansion into the space for a while?
Oh, definitely, most definitely. Interesting enough here is that when we conceptualized the healthcare fund back in 2016, 2017, we considered putting senior living in as part of the platform. What became very clear at the time was that there were no reputable players at the time, and we're just not sure there that we had the expertise to run that kind of business. So in the absence of reputable operator, we decided not to focus at it at all. So then our last 7 years have been focused more on growing the broader healthcare assets, more probably in the medical asset side. But when we started looking at globally now, we actually realized that if anything, a lot of the medical or healthcare companies now have a bigger proportion of their weighting in senior living assets. So that became, I think, something that we started pursuing, and we started scanning in the market. There's only probably one or two handful players out there that have got reputation and brand recognition, and certainly Aurea fitted that profile.
So you were looking at a number of different options, were you? It's quite interesting, though, that you mentioned that it was part of the strategy from the beginning. That's quite interesting to hear.
Oh, certainly. But with all these things here, sometimes all the moons need to be aligned. But and this is a hands-on business, and it's not an expertise that we have. At that point in time, if you don't have the expertise and if you're not capable to be able to go and get scale, it always makes sense sometimes to step back a little bit. And the opportune time has been now. So I think we're quite excited about the deal.
And what impact would the Aurea deal have on Growthpoint Healthcare in terms of scale?
Oh, certainly. It adds immediate scale to the platform. It gives us an additional about 2 billion of assets. They've got a new project that they're currently busy with in Salt Rock. That should add an additional 500 in the next 6 months or so. But beyond the day one increase in scale, we see significant pipeline coming from Aurea. I think this is a market that is currently largely private equity and in private equity hands. And certainly having the platform gives us the opportunity to grow this further.
So after this deal, what will the scale of the fund be? And I also see that you're still talking about a potential listing. Does it need to be at a certain scale before you consider a possible listing?
I think in theory, one doesn't necessarily need to be of particular scale, but in practice, to be able to get the right kind of benefit from listing and the listing benefits, one needs to be scale. So I think that's what this deal gives us. With this year, we'll get to consider in the pipeline that Aurea has, that's on the ground, It gives us asset size of about 7 billion. And when you're about 7 billion, that gives us the opportunity to go and list at the stock exchange with reasonable liquidity and with the ability to enter into some of the indices. But my guess here is that we will still wait for additional 2 to 3 years before we come to market, just so that we can get just a little bit more scale. And I think you know it. The bigger you are, the better it is, because you now begin to attract those big institutional investors that drive the market.
What are you looking for to increase that scale? Will it be more senior living acquisition opportunities, or perhaps a mix, or do you foresee potential new hospital properties coming into the fund?
We're looking for a combination. Our mandate allows us to go up to 50-50 between senior living and other healthcare assets. So we're going to try to focus a little bit more on the pharma facilities. I think we think there's a big opportunity there. On the pure hospital side, we're seeing the deal flow very thin. At most, and best guess, you might probably be able to get 1 or 2 assets, but I see a significant drive here of scale coming from pharma facilities and the new senior living.
Well, it's interesting you mentioned the pharma facilities, because that would have previously fallen under logistics, warehouse, and potentially industrial. But Adcock Ingram was mentioned in your press release, so I gather one of the assets that you have is a facility for housing their warehouse.
Certainly, but I think for your listeners there, what's important for them to know here is that our investment mandate is on healthcare assets, and healthcare assets is in a broad sense. The key criteria for us is that those facilities need to be licensed, and what you tend to find then is with that pharmaceutical facilities, they always have a certificate that's issued by the relevant authorities, and that allows them to be part of this mandate then.
I'm not going to ask you a question on that, but who knows? You could see some deals with other pharmaceutical giants, perhaps Aspen Pharmacare. That's not a question, as I mentioned. George, since this is the first time on your podcast, let's digress a little bit. Tell us about who is George Muchanya.
I've been with Growthpoint here now for the past 20 years. And prior to that, my career really was more as an engineer. In my initial years during my career, I studied at then University of Natal and spent quite a few years working more in consulting and construction industry back in KZN. Spent a bit of time overseas, and when I came back, I joined Investec then. But part of the Investec that I worked in was Investec Property Group, and that's where I met Norbert and Estienne, and we've been together since.
20 years, I didn't realize, because you had a previous portfolio. Just refresh our memories for those listeners. What did you do before Growthpoint Investment Partners?
So I was head of corporate finance, and it was, I have to say, the most exciting part of being at Growthpoint at the time. At that time, for those that are old enough to know the evolution of the SA REIT sector, the significant growth in the industry was about between 2005 and 2016, 2017. And that time, Growthpoint was leading a lot of the consolidation of the sector. And as a matter of interest, when I joined at the time, Growthpoint had a balance sheet consolidated of about 7 billion and now about 135 billion. And I was just fortunate enough to have been here at the time. And through that, I really was involved in pretty much most of the growth and working with Norbert and Estienne more on the M&A side.
Thank you so much for that. It's certainly valuable insights there, because, Norbert will be ending his term in the next year or two, and Estienne would be taking over. And it's good to hear that he has other partners who've been there for a similar amount of time as well. George, turning back to the news at hand, before we go back to the healthcare fund, can you give us, for those who might not know, what is Growthpoint Investment Partners and what does it do within the broader Growthpoint property business?
Certainly. And the reason why we called ourselves Growthpoint Investment Partners here is that we partners with other investors to go out there in the market, go and identify those niche asset classes that are not yet institutional mainstream. I think there is a lot of capital that's already invested in offices, retail, and industrial. But where we're seeing growth opportunities in real estate is specialist asset classes. If you look at Student Resi, which is one platform that's under Growthpoint Investment Partners, and we're speaking about healthcare now, and the previously was Lango. Our sole existence really is to go and find those opportunities. Growthpoint will act as an anchor investor in those, and we go and get third-party investors from institutional investors. And that has been the story, really. So we started off with Lango, then we conceptualized and kicked off healthcare, which is subject to today's discussion. Student Resi is another one significant platform that has grown significantly over the last 3 years, and it's also under Growthpoint Investment Partners.
Thank you for that. So essentially an asset management business there. I know Growthpoint has been pushing that as an additional revenue source for a number of years now, and it seems to be gaining traction, particularly on the healthcare and student accommodation side. On Growthpoint Healthcare Property Holdings, who are the major shareholders in the fund besides Growthpoint?
The second largest investor after Growthpoint is GIPF, and not to be for South African listeners here, not to be confused with GEPF. GIPF are the largest investor in Namibia, the equivalent of GEPF in Namibia. They are the second largest, biggest investor. They backed us big, and you also have Kagiso Capital that have also backed us as well. You've got Sentinel in there. And those, I would say, are the biggest investors in this platform.
George, you mentioned the Africa Fund, which changed its name to Lango. That, you could argue, was pioneered the asset light strategy that Growthpoint was implementing through these funds. Can you give us an update on Lango? Because you say previously, I understand it's not part of your GIP business now. And then perhaps you want to give us some insights on where things stand from the student accommodation side of things.
No, certainly. So Lango is now on its path to having its own identity. So GIP as manager, that is exited. The business has internalized its own management. That business has just re-domiciled to the UK. With the intention that it will list on the London Stock Exchange in Q3, Q4, and 2026. And that's really the evolution of all the platforms that we're creating here. We go through an incubation phase, typically about 7 to 10 years. At the end of that, we do an IPO, which is where Lango now is, and healthcare, as we discussed earlier, is coming the next 2 to 3 years, and next 5 to 6 years with the Student Resi. So Lango is out, but Growthpoint remains as an equity investor alongside other investors on that platform.
Okay. And the Student Accommodation Fund, I think it's called Student Accommodation REIT, but it also has a brand called Thrive Student Living. That business is also growing. Where does that stand in terms of size? Because it seems it's a little bit further away from a listing.
It is still a bit further out, that's right, but it has grown significantly. There are not a lot of businesses that you double in 3 years. That's what we've just been able to do there. So that business is now currently at about 4.2 billion in assets. With the project that we're currently busy with, the pro forma asset size about 5 billion. I do agree that it's a bit further out from a listing point of view, from an IPO and coming to the market. But we think in the next 4 to 5 years they to be ready for an IPO.
Just in terms of the Growthpoint Healthcare Fund, you say 2 to 3 year listing time frame. Has there been quite a bit of interest in the fund? What are your expectations of that listing in the future?
Interesting enough, some of the asset managers have been encouraging us to come to market sooner. But investors, existing investors, have the view that they want to incubate it further for the next 2 to 3 years. I think what we have seen across the board on the JSE is that On a net basis, there have been delistings, and certainly I can't remember any time when the last time that was that a real estate platform listed in the REIT exchange. Investors are really looking forward to it. What's particularly exciting to them is that this is specialist. This is different from what there is out there. And they're keenly looking forward to a day that we list on the JSE.
Talking specialist, I just want to conclude on this last question, George. Are you looking at other niche plays in potential specialist funds from a GIP perspective? The reason I asked, there has been a lot of talk and interest about the Resi with the establishment of Samara. And, a few other listed players have investments in the Resi space.
I think definitely there are a lot of opportunities out there in other specialist asset classes. So I think the issue here is less of opportunities. The issue is more that the South African allocators of capital don't really invest into private real estate. Whereas what you find globally, the likes of Blackstone and the Brookfields and all those platforms, they put a lot of their money through the unlisted market, and that drives the growth that you see in those sectors globally. In South Africa, this is something that we hope will get traction over a few more years. So certainly we do see opportunities, but where we probably need to convince investors a lot more on is them having a sense of what's happening globally and being able to have the courage of conviction to invest capital into these niche assets classes.
There's one other potential fund, and I'm not going to ask you a question on it because we had a hotel fund listed on the JSE several years ago, but it'll be interesting to see if Growthpoint will dabble in the hotel space because it's building a number of hotels down in the V&A waterfront. George, if you are happy to leave it there, I'm happy to leave it there. Would you like to add anything further?
No, just to say there that I think for those of us listening to the podcast that have always had a dim view about moving into a formalized senior living environment when they eventually retire, or for their parents, there is no better place to retire. I mean, I was one of those until I went to see one of those assets. I realized that there is no better place to spend your later years than is in a senior living environment. So let's hope that this is something that gets the interest of the listeners, and indeed certainly for them to consider that for themselves and for their family.
Thanks for that. We didn't go into the detail, but in the press release, I noted that there's a 1,600 waiting list on some of on Aurea overall. So that's very interesting. It speaks to the demand. George, I appreciate your time on the podcast. That was George Muchanya, the head of Growthpoint Investment Partners.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter @Suren Naidu for more of his property industry content and other business stories.